What's up, YouTube? This is Atticus from The Complete Trade, and today we're going to take a look at Coinbase stock. Now, before we start, I'd highly encourage you to watch the Bitcoin and Ethereum episodes I uploaded on Thursday and Friday, as we went in depth into 1, the reasons why we sold the majority of our crypto holdings, and 2, the pre-halving crypto correction. So I'll link both videos in the description down below. Okay, so this week, Coinbase is continuing its global expansion efforts by partnering up with Yellow Card, which is a South African Bitcoin exchange. By partnering up with Yellow Card, Coinbase is bringing its products and services into 20 different African countries. In a statement made by Coinbase, our new partnership will help usher in the future of money by giving millions of users access to USDC and fast, reliable, cheaper transactions on our decentralized open layer 2 base through both Coinbase and Yellow Card products. In a tweet made by Chris Maurice, who is the CEO of Yellow Card, we're beyond excited to bring Coinbase to Africa. Stablecoins like USDC solve real problems for real people and businesses on the continent. With Yellow Card's regional expertise and Coinbase's global brand and infrastructure, we will empower the next 1 billion people. Okay, so last Coinbase episode, we discussed that Cathie Wood was pretty much done selling Coinbase shares, and Cathie Wood this week has not sold one single Coinbase share. I also remember saying that just because Cathie Wood stopped selling doesn't mean that Coinbase stock will stop going down, and in fact, the downtrend was just the beginning. Fast forward to today, Coinbase stock has entered crash territory by crashing 30% over the past few weeks. Moving into the charts, for those of you that are new, Coinbase stock is trading in Wycoff Accumulation schematic number 2. We're in phase D, forming a third LPS, which stands for last point of supply. As you can see in the Wycoff schematic, the third LPS usually bottoms anywhere between the Wycoff support level and the automatic rally support level. So the third LPS on Coinbase stock should be bottoming anywhere between $83.32 to $116.30. This is why the advice, which is not financial advice, is to be patient and wait for $116 for a potential re-entry. And to be honest, the fact that Bitcoin is still above $40,000 and Coinbase is already crashing means that Coinbase stock will most likely go below $116 when the pre-halving correction comes into effect. I hope the majority of you guys watching didn't FOMO into Coinbase stock over the past few weeks. We've been warning about this correction for a few weeks now, telling you guys to take some profits off the table and not to FOMO your life savings into Coinbase stock. We talked about the Bitcoin ETF being a potential bull trap months before the ETF approval even happened. Hopefully, the majority of you guys watching didn't get destroyed on this recent Coinbase crash. With that being said, the long-term price targets still remain unchanged. This week, I also added the Bitcoin halving onto the chart, which is the line marked in yellow. The Bitcoin halving is projected to be in the middle of April. Remember, guys, cryptocurrencies historically have gone nuclear to the upside after the Bitcoin halving. So this third LPS that Coinbase stock is forming should be the last time to purchase Coinbase stock before we go to new all-time highs. Moving into some indicators, starting with the daily RSI indicator, the daily bearish divergence is continuing to play out as Coinbase stock continues to freefall. One bottoming signal we are looking for is the daily RSI to hit the oversold region, which is below 30. The current daily RSI reading is at 39.02. Shifting gears to the TD sequential indicator, the 9-count sell signal on the weekly time frame, coupled with the bearish gravestone doji as well as the bearish evening star pattern, is playing out perfectly. Moving over to the volatility expansion index, just a quick recap, the volatility expansion index ranges between 0% and 100%. The weekly reading on the volatility expansion index is at 90%, which is an extremely high volatility reading, which is why you're seeing Coinbase stock moving like a freight train. Now taking a look at Fibonacci rings, just a quick recap, Fibonacci rings are indicators that volatility is on the horizon. If you guys remember, we predicted this recent major move to the upside when Coinbase stock crossed the Fibonacci ring. The next Fibonacci ring won't be until next month, which so happens to line up with Coinbase earnings, and we all know that earnings can be extremely volatile for any stock. Closing things off with the Coinbase against Bitcoin valuation, doesn't look good. Bearish evening star pattern rejected off the red Fibonacci retracement resistance area. Short term, there may be a bounce coming because the Coinbase against Bitcoin valuation is tagging the 100 weekly moving average in orange. And as discussed on this channel a few times, moving averages often serve as liquidity points for potential reversals. One thing that is starting to concern me is that if you watch yesterday's Ethereum episode, we talked about the 38.2% Fibonacci retracement being one of the strongest Fibonacci ratios. The fact that the Coinbase against Bitcoin valuation has suffered such a harsh rejection off the 38.2% Fibonacci retracement is a bit scary, but the long-term bullish signals still remain. The Coinbase against Bitcoin valuation has pushed past the supply trend line, as well as breaking out of a bullish falling wedge and a bullish inverse head and shoulders pattern. Just a quick summary, we expect Coinbase stock to trade sideways or down for the first half of this year until the Bitcoin halving occurs. Okay, so that's my analysis on Coinbase stock for this week. I hope you guys enjoyed the video, and I'll see you guys in the next one. Take care.